So there's different types of SBA loans, which you've all heard of during the pandemic. Um, there's the 504 loan, which is what I do. There's a 7A loan, which would also be a benefit more so if you're buying not buying a property, but if you're going to lease and you need to do build out. Um, if you need to have working capital for a certain amount of time, the 7A fits. The 504 doesn't fit. There's different keys for different doors, and this one is specifically for folks who are looking to purchase their real estate, and that could be a standalone building, or it could be a commercial condo or co-op. The program fits. It didn't fit at one time, but because of enough pushing from New York City people and people from the other larger cities, SBA realized that cities have a different layout than the suburbs and the rest of the country does. So just a quick idea of what CDCs do and what we do. We've been around since 1998, and we are basically a contractor that does these loans for people with their bank. And we'll go into this as we go through the presentation. And then we submit our finished product to the SBA, and then they'll approve it or tell us they need more information. We've only had I worked with the president of the organization before this for 4 years, and then my time, we've only had 2 loans ever rejected. And one, I'm actually talking to the guy to refi his loan, and he'll actually be part of the book. And so it wasn't that he was rejected. It was at that time we couldn't do the loan. It's the same thing with the other one. We will go through the process with you and sit with you to make sure that this is a viable option for you, because we don't want to waste your time or money, and we don't want to waste our time or money. We'd rather have you in the best situation you can be in. So what we do, like I said, we market the program, we package the loans, we take it from the beginning stage all the way through until you pay it off. I am with you longer than some of people's spouses. I am the one who calls you up. I'm the one who kind of makes sure that you're doing okay during a time like we just went through during the pandemic, or through the hurricanes that we just had come through the areas. There's been a lot of phone calls of late. And really what the 504 is designed for is for land purchases and fixed assets. It's not for a commercial fleet of trucks. It's really for you to have a warehouse space, a storage space, a storefront if you want to have a taxpayer, where you may have a rentable space upstairs and then you're doing work on the bottom floor. And for fixed machinery and equipment. So if you need, for instance, right now we're working with a beverage company, but they need not only to buy their building, but they need an assembly line that helps them seal their bottles. We're going to help them do both. And it becomes part of the loan. You could also, if you need to do leasehold improvements, soft costs, all of those things could be rolled into the loan. And we would much rather know upfront that you need this help. We don't want to know after we've closed the loan that we've shorted you money, because that's the worst thing you could do to a business that's looking to expand, is not give them enough money when they need it. And we basically serve all industries. There are some that don't. The eligibility is you need to be a not-for-profit business located in the U.S., have at least a green card holder as part of your operating company, and we can pretty much make a loan to you. The ineligible businesses are the speculative businesses. We're not going to help a casino out. Right now, cannabis and hemp are 2 of the things that we can't do, but that's just until it gets approved on a national level, and then those guys will come in, because we've been contacted by those folks as well. You can't be a private club, meaning you can't exclude anybody. It can't be the old boys club up in Westchester. It's just not going to work. You need to have access. Everyone needs to be accessible to your business. And of course, we don't loan to churches. And the 504 loan limits are 5 million for a normal business, 5.5 million for manufacturing. It's works in a divided sense. It's kind of a hybrid loan. It's designed for you to take the next step in your business. And it's called a 50-40-10 is the basic structure. Meaning, like I said earlier, it's a hybrid loan. So the bank is the first part of the loan. It is whoever you have your banking relationship with. And if you don't have a banking relationship with someone, we can make those introductions for you. So that bank, the bank would be the upfront 50% cost. Then the SBA would be the secondary, would be 40%, meaning you as the borrower would only have to put 10% down. And this is for businesses that have been in operation for more than that have at least 2 years of taxes. So 3 years in operation. We can work with businesses that are startups. It's really difficult. I'm not going to say it's impossible. We've done loans for folks that are startups, and that would change the structure just a bit. So instead of me doing 40% of the loan, it would be 35%. And we'll go into that a little later. And the capital injection by the borrower would be 15. But the bank is always 50. People always ask, can you take more? It literally, there's only one scenario, and I've never come across it. So it's normally 50-40-10 or 50-35-15. And this is just an example for you to be able to see what, and everyone who's in all the photos and everything you see are actual loans that we have as part of this. But you can see if it comes out to $1 million to do the purchase of the land and the construction and your closing costs, this is what a structure would look like. And this is just high level, so we all understand. Everyone's not going to be this easy. There's always hiccups, and we understand that. Like I said, we can do new businesses or limited purpose facilities, and it's the same thing. You would have to put more money down if you're opening up a theater, or you're doing a golf course, or a motel, hotel, or gas stations. And if they're a startup, like I said, of those industries, instead of it being 15, it becomes 20%. But when you go to a bank and you try and do a loan for any of these things, they ask for a lot more money down. So it is one of the best shows in town. The SBA drives us crazy at times, but it's a great product. And the loan terms are simple. It's 20 or 25 years, fully fixed, meaning the day we go to closing, whatever the interest rate is, that's going to be your interest rate until you pay off the loan. It doesn't go up, it doesn't go down. That's not the same for the bank side. That's a separate negotiated contract. So the bank side can fluctuate, and they do different things where it could change every 5 years or every 10 years. You pay on the bank side to fix your rate for a longer amount of time. So meaning you'll probably have to pay a higher interest rate if you want to have it fixed for a further. But right now, I know someone who did it with us on a restaurant, because in theory, he knew he'd be paying somewhere north of 4%, and the bank offered him a 10-year fixed on his end. So they'd only do it once over his 20 years with the bank loan. So he literally fixed it for 10 years, but his goal is to pay it off before then, which should be all of our goals too. So the real estate side is 20 or 25 years. Equipment is 10 years. They get rolled into one big loan when it gets sent in. So it's not two separate loans. We can do it that way if you want. Or if you come back later and say, I need this equipment, then that's how it'll happen. And this is just the size eligibility, and this isn't written in stone either, but this is the normal thing. If you take 2 years of proceeds and you average them out, you can't have made more than $5 million, and the business can't be worth more than $15 million. That's the what the federal government calls anything below that is a small business. We could also use jobs as a indicator of this. So if your business is close to this, we can look at what your NAICS score is, which is another deeper dive thing, but we look at what industry you're in. And then if we can use your how many jobs are, because there's also another number that the federal government uses of how many jobs you create or how many jobs are underneath your NAICS score, also can qualify you as a small business or a large or medium sized business. So this is the first set of numbers that we go by to make sure you qualify. If you're close to this, then we'll look at what your what that NAICS score is and what jobs you could create. Because that's really what this is a job creating loan. So if we realize you're a little bit bigger than 15 million, but you're going to create 200 more jobs with this loan, the federal government will loan you the money. And it's just pretty straightforward. Life insurance could be a requirement. It's actually something I say everyone should have, especially once you're starting to purchase property. You don't want to have anything in limbo, especially you want your business to continue after you are gone. You want to be able to have that in place. Make sure that anyone who owns 20% of your operating company, which if you're a mom and pop, it's just you and your wife, that's the only two people we're concerned about. But in some of the larger businesses where you may have 4 or 5 partners, if anyone has less than 20% ownership, they don't have to be a part of the actual loan. And your spouses do not have to guarantee. With some loans they actually do, but with this one you do. And like I mentioned earlier, the bank holds first position. And the reason why we do it this way with the 50-40-10, because it improves their what they call loan ratio, loan to value. Meaning from the first payment you make, your loan to value to them is less than 50%. Meaning they've already made money on the loan, which is why banks like to do this type of loan, because it makes them more comfortable with the industry, the operator. The federal government takes a lot of the pressure off of it. We'll process all your paperwork, and like I said, the interest rate and fees on the first mortgage are set by the lender. I mentioned that earlier. So that you understand how we get paid on this, there's 50 basis points is just a banking term for we get about 1.5% of the loan. That comes out of the loan at funding. So you don't pay that 1.5 up front. All someone would have to pay to actually go through the process with us is a $2,500 deposit. That $2,500 goes actually toward that number. So once you go through the whole process and we get paid, we refund you the $2,500. The term of the loan, like we mentioned earlier, is 10 years on equipment, but that equipment has to be for a 7-year equipment loan. I misspoke. If you're getting an equipment loan, it's a 7-year loan, but the value of the equipment has to the usable time of the equipment has to be more than 10 years. So that it makes sense for us to actually finance it. And like we mentioned earlier, after 10 years, you can pay off this loan. After 7 years for the on the equipment side, after 7 years, you could pay off the loan as well. And there is no penalty once you go beyond that time. So after 7 years on equipment, after 10 years on real estate, you could pay us off with no charge. And it's pretty straightforward. These are the benefits. It's a low down payment. It's one of the best shows in town. It's a self-amortizing fixed rate. We can roll your closing costs into the loan, except for the attorney's fees and some of the professional documents that have to be ordered, which a lot of the banks put that on their end of the loan. We don't usually do it on our end, but like your appraisals, if there has to be a phase 1 or phase 2 done to the building, that stuff is ordered, which is an inspection of the real estate, all that stuff gets done on the bank side. And just to show you, think I went too far. I want to back up. And this is one of the biggest benefits. In New York City, there is a mortgage recording tax of 2.8% on anything sold here in the city. Since we are a nonprofit, we can waive that 2.8% on your 40 or 35% of the loan. So as you can see, I put in a couple of different loan amounts, meaning this is the money you'll save because of the waiver. If you actually are in with a nonprofit lender, meaning a credit union, if that credit union does commercial lending, that means you're basically waiving the whole 2.8% that you have to pay. The only part you'll have to pay that on is on your 10% down payment. So I'm not saying you should do business with a credit union, but they should be part of your Rolodex. And I dated myself by saying Rolodex, but they should be part of your, when you're looking at this, an opportunity for you to actually earn your business. And like I said, these are the, so if you're paying off early, these are basically the penalties that you have to pay, which is basically you have to 1/10 of the outstanding loan at that point is the best way to put it. So if you happen to owe $1 million still, you'll probably have to come up with $100,000 plus whatever is outstanding. So that's kind of your prepayment penalty by the SBA. They don't. So to understand how they set the price for these things and why they're a little bit cheaper than the banks are, is because they only do it once a month. The bank does this on a constant basis. Every time someone walks in, they can forward lock a rate. You'll hear them say they'll put it down and they'll kind of put it. The SBA does it once a month. And then they sell bonds once a month to back up what they've said the rate will be. And because of that, it's a lot less money because you're only doing it once rather than for 100,000 loans that month on a federal level. So that's why they're a little bit less than what the bank is and why we can't forward lock a rate. Your rate is what it'll be once we go to closing on your loan. And this is kind of a job generating loan, like I said. So this is kind of an idea for what they're looking for. It's not written in stone. So I don't want everyone to get scared of, I have to create, 10 jobs because I have over $1 million out. These are guidelines. We do have some folks that do, which is the reason why they kind of give us some leeway, because they understand that some jobs, some companies won't generate the amount of money, the amount of jobs that this is. But really what they're looking for is to kind of just create those industries and those jobs. And to be able to give you, the people who are the ones that are running these businesses, the opportunity to grow your businesses with, as my underwriter calls it, stupid good rates. And he says that's an official banking term because you can't get what you can get through the SBA program. And I'm not going to lie to everybody, there is a lot of paperwork that goes along with it. We will walk you through it. The best way that kind of removes you from this at times is if you have a bookkeeper or you have your person who does your taxes, and just let us talk to them. A 5-minute conversation with those folks and we'll get everything that we need, rather than having you be the go-between, and then it becomes kind of a tough situation to deal with at times, especially since you all are running businesses and you don't want to be talking to me every 5 minutes because I need a P&L for 2019. We can update this now at the end of this month. These numbers have all gone up, but this is what we've done prior to this year. We have our office in the Bronx, but we are a statewide lender. We can do this program anywhere in New York State. We have partners in other states that do what I do. There's only about 140 of us nationwide, so it is a small group of us. So I can speak for Michelle and myself. We want to keep you in the New York, New Jersey, Connecticut area. This is where we operate, so we want to make sure that you're local to us. But it is a program that if you have someone in California, we can definitely put you in contact with someone that does what we do. And I'm sure this was probably a little quicker than I would have liked to have done it, but I want to kind of, since we have a small group, just answer any questions people may have, kind of talk this through a little bit further if you have anything you'd like to ask.
Rafael, I have a question that was asked to me about whether it was from your beginning slides, but can you explain again exactly what the 504 is for? Can it be used for working capital, or what it's for real estate, but for what else it's used for?
So I can explain to you, there's a number of SBA programs. The 7A is the working capital program. That, and you can do these in you can get a 504 and a 7A at the same time. So I don't want people to think just because you do one, you can't get the other, because they do work along with each other. If you're going to expand, you need money. That's part of what this is. So when we sit with the banker, the 7A usually would go first. The 7A, they want to see what working capital is needed. As part of the expansion, what you're going to have to buy, what steps you're going to have to take to support the building that you're going to buy. So the 7A will go first. That's always the first thing that gets approved. Once we get, and the easiest way to describe it is because the bank or the organization that does it for you basically underwrites you, and they hit a button in their office and it goes directly to DC and the check gets cut. Then the bank will turn around and say, okay, well, we got them their working capital and we got them their money that they need to actually do some of the build out on this side. We just want to use the 504 to take the building down. And then we'll come in after and we submit to SBA, but the SBA will need the 7A number to go in, which is probably too much to say here, but that's basically what happens. You need to do one before you can do the other. You can do a 7A. There's microloans. Maybe you're not ready for this step yet, but you do need some working capital, or you're just trying to expand the space that you already have. Some of our SBDCs here in New York State can help you identify lenders that are doing the microloan program, which is up to $50,000. And that's really just a quick influx of money to be able to maybe, you got to do a move because your lease is up and you need to get to your next spot. Or you need it as kind of a line of credit. That's what that smaller loan is for. The other SBA programs that you've already heard of is the PPP program, which was everybody's favorite 3 letters for about 18 months, which is strictly through the SBA directly and through certain lenders that they put in charge of putting that money out. So it worked like the 7A did, where you could go to your local bank and say, I need this. They took a look at everything and then they hit the button in their office and it went right to SBA and the check got cut to you. The EIDL, the Economic Injury Disaster Loan, is kind of like the same as those FEMA loans that kind of go out when things happen. They just kind of did it in a different way for businesses. That was literally directly through SBA themselves. No one else was allowed to touch that loan. So for you to be able to get that, you had to use a small business development center or a business council of some sort that was in with the SBA to be able to get that money and actually ask for increases, which you can do now if you need more capital. So I wish I had their email off the top of my head, but the New York State Small Business Development Centers all around the state, there's one at Pace, Columbia University, they're all over the state. They're part of the SUNY and the CUNY systems, and they can kind of connect you to who you need to be with to, if you need to increase your EIDL loan. And I think I answered the question after all that.
Well, the 504 is mostly real estate, though, right? And machine.
It is
right.
real estate and fixed assets, meaning if it moves, we can't lend toward it. It needs to be nailed down in your building.
Patrick, you had a question?
Yep.
Yeah, can you talk a little bit about how you said that you're the first person that you come to because you're a community development corporation, and that you help fill out the paperwork? At what point do you suggest working with a real estate agent, and when do you need to bring in the other experts, the architect, the engineer? Like, can you give us like a timeline of how one of these things works? Just talk us from, you know, months, days, weeks, whatever.
Absolutely. So right now it's probably because of all the economic disaster loans and everything that's gone on the system. And you might have heard the SBA has actually reached its lending limit right now. So this is a little bit of an enigma right now. So I'm going to talk on a normal level what happens, and then I can kind of backtrack and tell you how it's going on right now. So on a normal level, I would say as you're working with your real estate broker, you should be talking to us and to your lender. So we can start to organize you. And really what that comes down to is what we're going to ask you is for 3 years taxes for your personal and for the business. And meaning personal, it's those people who are the people who operate the business itself, the owners of the business. It doesn't have to be, like I said, the owner that's less than 20%. It's just those folks that own more than 20% of the business. Once we get to that point and we can look at that, our underwriters then come in and say, we need more information. And it's the same thing on the bank side. We need more information. It's one of the reasons why we all kind of work together, because we don't want to all call you at different times. Sometimes I'll be the one who's leading. Sometimes it's the bank that's the one that's leading. And then we'll give each other a finished product. So how this works is normally you'd be working with Michelle. Michelle would say, hey, I know Rafael. Within the month or 6 weeks or 2 months that she's showing you properties, you find something. Well, during that time, if you share the information that we need, we can at least start the background of this. And on the bank side, they can kind of give you more of an idea of what they're comfortable lending you. Because I can talk all I want, but the bank is still the first position on this loan. We need to make the bank as comfortable as possible. And some banks are different than other banks. Just like you can't go into a French restaurant and ask for American food. They may do it for you, but it's not going to be as good. It's the same thing as a bank. Some banks will lend in some genres. Some won't do restaurants. Some won't do commercial condos. So you just need to fall into whoever we're going to fall into.
But you mentioned that credit unions were the best. So a credit union that does commercial lending will save you the most money.
They'll save you the most money, but they may not want to be in the space that you're in. You need to keep that in mind. But
what do you mean by the space that you're in?
So it could be the type of business that you operate. They may not want to lend to that particular industry. Everyone has their own comfort level of who they want to lend to. Now, that I'm not saying you in particular, I'm just saying in general, they will lend to you, but they may you may get a higher interest rate from Chase because they don't want to really be in that industry, but TD Bank will give you something really good because they do. because you can shop your rate. You can go to your credit union, you can go to the bank and see who gives you a better rate.
How do you find out banks' comfort level and spaces they like to be in?
That's something that we can help you with. We can make those calls to people on our board of directors. Those are usually the folks who are the guys who lean on whoever's doing the underwriting. And most of the time, they're very straightforward with me of whether this is something they're comfortable with. And most of the time the way we're operating right now, it's not the industry so much as the operator. In years past, I would have said it's the industry. They're not lending to hotels. They're not lending to this. They're looking at you. If you made it through the downturn in 2007, and then you made it through this one, they're going to lend to you because they know that you know how to run a business. They know that you've been through hard times and you keep coming out. They'll be more comfortable.
Do we need to write a narrative of that, like the history of the business?
And that'll be part of the underwriting. They will talk to you and will interview you, and we tell the whole story to the SBA, like they'll tell the whole story to their board of the directors. Every loan goes before a board, and they vote on that loan. And part of that is knowing who that operator is, and they'll tell that story. They have to tell that story. It's the only way we do you a service is by doing that. But I would say a normal situation from beginning to end, these loans probably take about 60 days. Right now, I could tell you from the time I submit something to the SBA to I get an answer is about 45 days alone. So we've pushed back out where this is now probably a 90 to 120 day process. But the one good thing about New York State that we could all agree with on the real estate side is the way they write their contracts. You don't have to keep negotiating a contract again because they have something in it, and I forget the actual wording is, but it's on or about is usually what they use in the contract, meaning just because we said September 1 is the day we're going to do this, if we don't get there September 1 and it's November 15th, you're okay. We don't have to go back to the drawing board and pay attorneys again and do this thing all over again. We just need to make sure that your seller, that who's selling to you, is comfortable. And all that being said, the bank can go first and take the building down for you, and then we can come in after and do this. So it's not that we need to go with them at the same time. It's beneficial to everybody if we do, so we're not bothering you often, but sometimes it takes the bank to go first and the bank grabs the building for you so you can start getting going. And then we can come in, and in SBA world, it's called put permanent financing in place.
Does that answer your question, Patrick? Or
I still don't understand it. It seems like it's, just like, like you mentioned, looking with your broker, you're looking at something, but until you and the bank does the evaluation on me, the buyer, business, taxes, if you don't have a property identified, they're just looking in a void. There's no real asset to evaluate. You have to either identify a property before you can evaluate the deal and underwrite the purchase. So it's just like, what comes first, the chicken or the egg? It's and then looking at us. So you're saying it's less about the business and the industry now and more about the individual business. So then when does that valuation start? How do you write up something that tells the history of the business and how you've recovered And is that a business plan? Is that a narrative? And who do you communicate that to? Do you start with your CDFI? Do you go to your bank first? Do you start shopping it around to different banks to see who is interested and who's interested in your industry and who's interested in you? Do you start with credit unions? Do you start with your regular banks? Or if the bigger banks are not going to be as good for you as the credit unions, do you start there? If you go to a CDFI, how do you pick which CDFI? Do you do the one in the Bronx if you're in Manhattan and you're wanting to do something in Manhattan? Do you know, it's just like,
Yeah.
There's so many people and so many players and so much information. It just seems overwhelming to me.
I would say you should start whoever you have your business relationship with at first. That should be your first step to say, this is what I'm thinking about doing. And really, even before
You
you
mean
get
your
to
business
there,
banking account?
your business banking account, along with your CPA. Your CPA
Okay.
knows where all the bodies are buried. He can give you a really good look at what you should be looking at, what you can afford. If you don't have that, it's something you should start to develop as well. On both sides, the banking relationship, a good banker, a good CPA, and a good attorney are the three things you're going to need throughout the whole process. But really, you should start to talk with your banker, talk with your accountant, and then Michelle is the third step. But it's kind of, everything kind of happens at once because we all kind of need each other. Because we can't start moving until you have a contract, but you need to know how much you can spend before you can get the contract in order.
So you can't even start the application until you have a property.
Yeah, you can start to submit information, but we can't really give you the deep dive until you get the property identified.
But can I ask you, Rafael, just about this? Because this comes up with people who are buying, right?
Mhm.
Like with a business, you're giving a loan looking at the business's income, right? But then how much someone really wants to pay is while you're talking to the CPA, right? So you could maybe borrow more, that your income really enables you to borrow more, but you don't want to carry that much mortgage.
Exactly.
And so
Exactly.
that look, so if you, it would be you, right? Or whoever gives the SBA loan would be looking at the income to know what could be borrowed in terms of the total amount, but it's the discussion with the CPA about how much do you want to carry? Is that accurate?
Accurate. That's really the conversation you want to have of, just because you sit down with a bank and a bank tells you you could afford a $10 million building doesn't mean you want a $10 million building.
Yeah,
Really
I think it's overwhelming because we're speaking in general terms. I bet if Patrick has a one-on-one with, and it is a dynamite question with you, Rafael, I think it's easier because I think that I would even backtrack a little more. Like, what is it that Patrick wants to do? Like, I'm making things up. Maybe he's a florist and he does these amazing floral installations and his business. Does he need a warehouse? Does he need trucks? Does he need these crazy famous scissors that help him cut roses faster than anybody else? Like, what is it that he needs? And what does he, so I think, and then you look at, well, it's not unlike if you buy a house. It's like, do you really need a $20 million mansion? Is that what you really want? Or is it that you really just want a single family home that you can afford? And so it's what you, as I'm hearing this, the only difference is that you have the added benefit of taking in the revenue from your business to help you qualify for what you can borrow. And Rafael's here to help you understand that you get some from the bank, but then SBA can come in and if, obviously if you can make a good case for what you're trying to do, they will help you with this very, what's the word I'm looking for? Helpful loan. And I did want to say something else. My friend's restaurant, Charlotta, was on, she has Chez Oscar in Brooklyn. I don't know if you worked with her, But yeah, I know her very well. Her name, she keeps coming up for me. She also has a gallery in Hudson. And I know her partner very well. He's a photographer. But anyway, point is, when I saw the picture, I thought, oh, okay, well, that explains, because I kept wondering, like, how did Charlotta manage to like get all this going? Because it would take a lot of capital. It's a great piece of property, and she's done a lot with the restaurant, and it makes sense. You know, it's you're getting money based on future profits from your business, basically. So, you know, whatever it is that you do, Patrick, and whatever it is what you're doing now, I would think about it more like, how can Rafael help you scale up, whatever that looks like for you? You know, do you need a warehouse? Do you need a studio? Do you need an airplane? I don't know, whatever it is you need to help you get to where you see your business going. And I also wanted to ask too, and this may be helpful for Patrick, is it a one-shot deal? Like, is it like, I can only go to you guys once? What if I only see myself going like, well, right now I see myself really like taking over Manhattan, but maybe I see myself branching into the other boroughs with whatever I'm trying to do. Can I come back to you in a couple of years and we kind of restructure and grow from there as well? Okay, so that's another.
So the SBA, actually, to what you just said, just changed those rules. You can come back. There was they were a little more difficult to deal with, but now I believe the number is up to 15 million in total.
Right.
So if you need to get a warehouse in the Bronx or in Westchester to support your commercial condo that you're working out of in Manhattan, you can do both. Right. I have somebody right now who is a car mechanic, but now he actually does the body work as well. It's one of those things, the son and him broke up over work. The son started this body work thing. Dad's a mechanic. They're coming back together. And they didn't own their spaces. So they're actually buying all of them together. And what they do is once the guy fixes this up, they sends it over to the others. It's the same thing what you're talking about. It's two separate spaces that we purchased, and the total assets were about 7 million, which now in theory, in 10 years, once they've paid this back, now your cap is actually a little bit higher. So if you decide you need to expand or you want to go a little further out, like I said, until your business is over $15 million, you can keep coming back.
Okay. And I had one last question. I thought I saw in the earlier, it was, I think maybe the third slide that you showed, Rafael. I thought I saw that it said you couldn't be for profit, or did it say you couldn't be for profit?
You have to be a for-profit business.
Okay, good. I just wanted to make sure, because that was the one thing that I thought I should have did a screenshot, but yes. Okay. That's helpful to know.
You
right.
You can't be a nonprofit, a church,
right.
A gambling den, which we all want to be a part of, but
and can I ask you also, Rafael, just to clarify, because I have talked with Patrick a little bit. So the application, like, you do help people pull together their package, right, for the bank?
Yeah.
And that's the package that also goes to the SBA. So you kind of guide people through, tell them what they need to do, help them. Because I know, like, even with that one artist we were working with, like her resume, her showing, like, you and your underwriter, seems like you understand, especially like cultural capital. Like, I've been impressed by that, just for everybody.
Yeah, that's really the best thing, the best way to put it is cultural capital, exactly that. We are trying to tell your story. On the bank side, it's more so the numbers. On the SBA side, it's a total picture of what this person looks like. The numbers matter, but it also is character, how they're helping their community. A restaurant I'm working with in Brooklyn and Staten Island, the guy literally was a dishwasher there and worked his way up, and now just bought the restaurant 6 years ago from the owner who was retiring, paid it off already, and is now buying the building. I mean, those stories are incredible. And to find a person like that, or to find we're working with the 4th generation business out in Long Island, those are the stories you want to tell. And they get lost a lot because we think about Amazon, but there's a lot of other folks out here doing things that deserve to have their time. And the SBA has these different things that they do to promote their businesses. So as we go through the process with folks, we also push them to help promote you guys once you get into the system. So we hope it's a self-fulfilling, a circular thing that we do, that this money that you get that's a lot cheaper than what you would normally pay for will allow you to expand. And then I've also had the other side where the business grows and they're too big for me. And then the guy gets mad at me because he can't get a loan. And I'm like, no, you should be happy. It means that it worked.
Right.
This guy has 8 locations now. And he's mad that he can't use the 504 to buy the 9th one. I was like, no, it means you're doing what you operate really well. You've expanded. You don't need me anymore. So there's a reason why I do this. I used to be in insurance and I couldn't sleep at night. This, at least I know I'm helping people.
Does anyone else have any other questions?
Oh, and also, like you mentioned business plan. That's also one of the things that I do with this program too, is I kind of go out and I talk to people about being bankable, about what you need to get a loan and what you need to do all this stuff. The business plan, if you have it, is really a big part of this too. If you have it already and you've updated the financials as you go, that's a big step in giving us the story of you. So if you have it already or you haven't done it, it's something you should start to think about doing. The small business development centers, like I noticed, if you have a business counselor, SCORE is another one that's a federally backed organization that'll help you get these things together. They'll help you build that so that when you're ready to, and I'm not even talking about a 504 loan, I'm talking about the $50,000 small SBA expansion loan, that'll help you get to that point. But it really helps you when you get and you're trying to buy real estate, especially with this program.
Thank you so much.
Yeah, not a problem. I know it's a lot of banker talk at times, and it's the part of my job I don't like. But what I do like is these things, is talking to people, being in front of folks to see how we can help. And to what was said earlier, I can't remember who said it, but you need to think about every time you sit with the banker, and if you get anything out of this is this, if you want to have money lent to you, you need to actually put down what you're going to use it for and how much you need. Because if you ask the bank, I need money, and then they said, how much do you need? And you say, how much do you have? They're going to know you're not ready for that money. So if you know, and you already have made yourself aware of how much this new line is going to cost me, how much working capital I need to get it going, 6 months of this, blah, 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 you put it all together. Sources and uses is what we call it. You need to know exactly what you're going to use that money for. And then that at least lets the banker, whoever you're sitting with, know you're serious. And you're not just there kicking tires. You want to know what the interest rate is if we do this.
And I guess maybe that would be the discussion to have with the banks, Rafael, like you start with your first business banker, like, would you loan to me to do my kind of business and what would be your rate? And then you could shop around to see, and then SBA would be filling in, because you guys aren't as picky, I guess, as the private banks. Is that?
Yeah, we'll take a look at the project and the actual operator. It's why we ask for the taxes first, so you get the numbers out of the way right away. And then we start the deep dive into how you run your business, who are you, what do you do, who do you service, are you a minority business, are you a veteran, are those the people that you're serving, what your community is, all that stuff gets put in. It's like I said, it's a lot of work, and at the end, there's a reason why. Because you have a fixed rate loan for 25 years, which is unheard of, and the interest rate is about 3%.
You can go ahead.
I just wanted to ask, how are you dealing with 2020 taxes, and do you suggest waiting until you have your 2021 to show how quickly you're coming back to 2019 numbers before you apply, so that it's 2019, 2020, and 2021 for your 3 years?
Yeah, what we'll do, because we understand that everyone got kicked in the teeth. So what we'll do is we'll look at that and we'll ask you for interim numbers for what you're doing coming up, like what you've done to this point. Or the other way that our underwriters have gone about it is to ask for the year behind, so to get 4 years, so that you can kind of see what the pattern was, and then if there was a drop, and then we're going to ask for your interim numbers anyway, meaning what you've done year to date right now. So then with that full thing, you can say, oh, well, he was a restaurant and he couldn't serve anybody, or you're a special events person and there were no special events. So you were able to bounce back because, oh, things reopened and people love what he does, so they're going back to him. So we will either look at 1 year behind, or if you have the ability to wait, some people don't, you need to go into your new space, we'll ask for interim numbers for that year. But if you can wait, I have a board member who's actually waiting because his year ends this month. He actually ends in September. And he got 2 new contracts because he's a special events caterer. So he wasn't doing anything. But he got these two new contracts that now makes his numbers better than they were before the pandemic. So we can figure it out with you. Especially if we see that going into this thing, you were trucking right along. And like I said, the banks see it as, if you were around in 2005 and you got through 2007 to 2009, and then you got through this, they know that you can fight, and they're going to fight with you.
Rafael, I have 2 questions here that came in through the chat. The first one is, how do you get a property under contract without having a pre-approval letter?
So normally, the commercial side doesn't do pre-approval letters, but they'll do letters of interest, meaning based on the financials that we see, our client can qualify for this property. And pending anything crazy, we feel he's going to get through or she's going to get through this. They're going to get through this, and they will have money in place in 40 days or 45 days, whatever it takes for the bank to kind of jump out first. In the current market, in a normal market, we'd both be running at the same time and you'd be done in 30 to 45 days. But now it's really pushing the bank to move first.
So you would have an LOI. So you would have looked at people's financials and you'd have a sense of what they could be, and you could give an LOI that could go with the offer.
Yep.
The commercial property. And that would be replacing the pre-approval, which is in residential.
Mm-hmm. And with the LOI, we usually overestimate fees and everything on the LOI. Just because it's New York City and you never know what happens, but your closing fees are normally about 5% of whatever the property is worth. It may be a little less, it may be a little more, but that's the gauge. So we'll be right in there when you look at our LOI. But really, yeah, we'll give you a LOI. The bank will give you an LOI. And then we'll tailor it to the situation. Like we said, if you need a 7A as well, we'll give you a 504 7A LOI, and this is what it looks like, and this is what your payments will be, and pending the Armageddon, this is what it's going to be for the next 25 years.
Mhm, mhm. And then I have one more question, just asking to clarify, when you had talked about getting a property and then having bankers, attorneys, the SBA. So it seems like you have to have all those things before actually finding the property, or when you're finding the property.
Yeah, you should be kind of engaging with everybody at once. Your broker needs the banker because he needs to get paid. The banker needs the broker because he needs a contract. It's kind of we all need each other to actually move forward. I would definitely say if you're thinking about doing this, you should start to talk to your business banker about what they need. And I can tell you what they're going to ask you for is 3 years taxes, personal and business. That's the first thing anyone's going to ask for. And then based off of that, we'll all ask for things to fill in. What are you doing right now? Then the interview portion of this starts. How long have you really been in operations for? What do you want to do with the money? Once you get through this next 5 years, what do you see the next 5 years as? Is they want you to have a plan. That's really what it comes down to when you sit on that banker's side. They just don't want to lend, they're not going to lend you the money just because you walk in there and say you need the money. It's based on your business, and it's based on if they feel you can carry it. It's a weird thing, and I've said it to bankers before, but it's absolutely the case. They only care about getting out of the loan. They don't care about making the loan. They care about how's it get paid back and how do they get out at the end. It's a cold truth, but it's the absolute thing here. So you're gonna want to be able to say, this is what I'm using the money for, and this is why I need you.
Any other questions? So is it okay, Rafael, if people are interested to reach out to you directly and to
Yes.
this specific situation?
I will say over the next couple days, email me